Folks, I want to talk about one industry that is flying under the radar right now. Now, what I love about this industry is that it's slated to go up regardless of who takes the White House. Democrats win, Republicans win, it doesn't matter for this industry. And that's why I want to talk about it today. And as a matter of fact, this is one of the best industries that I see over the next couple of years, so pay attention to what I'm going to talk about today. Now, approximately 67% of U.S. households have at least one pet, according to the American Pet Products Association, APPA. That amounts to 84.6 million households, up 6% from 2015. So the growth is really big. We had 79.7 million pets. Now we have 84.6 million pets. That's huge number of pets. And these households, particularly dogs, consider them members of their family. Now, spending on pet care, wait till I tell you these numbers, continues to be a huge number. According to the American Pet Product Association, spending for 2020 is projected to come in at almost $100 billion. No, that's not an error, almost $100 billion, more than $99 billion. In 2019, the number was about $94.7 billion. So it's increasing about $5 billion a year. Do you have any idea how big that is? That's huge. Now, this spending is including food, supplies, vet care, and grooming. We have 3 dogs and 3 cats. We probably spend more on their food, supplies, vet care, and grooming than some families spend on kids. We've got a lot of pets, 6 pets. So again, this is a huge industry. It's a huge sector. And I want to give you guys 2 stocks that I think are going to do very well over the next quarter or 2, irrespective of how the elections go. So the first stock is Zoetis. Zoetis or Zoetis. I may be mispronouncing it. Ticker symbol is ZTS. Now you could look on this chart and we'll blow it up a little bit here. You will see that the chart is doing very well. It's a great relative strength stock. If we look at it over a 9-month period, these are new highs and it looks like it's making a comeback. Over long term, it's near all-time highs right now. It discovers, develops, manufactures vet vaccines, medicines, and diagnostic and genetic testing for animals. And genetic testing have gone really popular. We just did a DNA genetic test on one of our dogs, and we thought I'm not kidding here. We thought this dog was a miniature poodle and a Yorkshire Terrier. It ended up being an 80% Shih Tzu. You can't make this up if you try. You can't make this stuff up if you try. So this company is doing really well fundamentally. The 5-year return, 250%, 5-year revenue growth, 30%. Dividend growth in 5-year is 127%, 5-year earnings growth is 131%. Everything is looking great for this stock fundamentally. It's had 4 positive quarter of earnings surprises, and my target on the stock, which is currently trading at $160, is $190 per share. Again, it may take us 1 to 2 quarters to get there, but I'm expecting a nice, good ride to get there. So it's currently at about 160. 30 more points couldn't hurt anyone. That's what I'm expecting if this stock breaks out. The next stock is Covetrus, ticker symbol CVET. The first one was ZTS. Now we're looking at CVET. It provides animal health technology, and technology for animal care is growing just like technology is for people. The company combines practice management software, prescription management, multi-channel client engagement services, everything you need for the chain infrastructure, connectivity between vets and their clients. And by the way, my kid's trying to get into medical school in a few years. He's telling me that it's harder to get into vet school than medical school, if you can believe that. Fundamentally, 1-year return, 36% growth. Last quarter, it had an earnings surprise, 137% positive. The stock is going through a pullback right now. Let me show you the chart. But I love the fact that it had a 137% positive earnings surprise. And if you look at it on a 9-month basis, it looks like it's pulling below the 50-day moving average. I would wait to buy it when it goes back above the 22, 23 level. That's when it'll be above the 50-day moving average. Let me just clear all these studies here. So you could see here, it just made an all-time high or a multi-year high. Let's see here. No, it didn't. It's coming back actually, which is good. It just filled this gap. This is, I'm looking at it right now, April, February, April last year. So as you can see here, the stock is making a comeback. It was trading at about $45 a share February 2019, and it went through a downtrend, but it is coming back up. One of the reasons why I see it coming back up is because this industry is gaining a lot of momentum and a lot of strength. And again, this vet care, testing, people are becoming more increasingly sensitive to pets and are treating pets more and more like family. Just think 30, 40, 50 years from now. It was a very, very different time. People gave them dogs and cats scraps off the table. Now they have genetic screening for pets. So as you could see here, the trend in pet care is mimicking the same trend that we are seeing for people. There's a lot more money going into pet care because the industry is recognizing the fact that people are spending a lot of money for pet care products. So if you look over the last 3 or 6 months, you will see that this stock, CVET, has been doing really, really well. And the fact that it had 137% earnings surprise last quarter is substantial. Most importantly, the price target on the stock is about $30 a share, and it's currently trading at about $18 a share. So I believe if this stock comes back up to the $22, $23 level, let me show you where the 50-day moving average is. Let me just make that 50 here. So you could see here, it needs to cross above the $22 level, $22, $23 level. I would feel better if it crosses the $23 level and then stays up above the 50-day moving average for 2-3 days. Then I will feel a little more warm and fuzzy about buying this stock because I like to buy stocks that are trading above the 50-day moving average. But again, I'm bringing the stock to your attention, CVET, 137% positive earnings surprise, 1-year return of 36%. Healthcare management that's cloud-based, that connects vets with clients, $30 price target, I like it. And the first stock was ZTS, and that stock is trading above the 50-day moving average already. So ZTS is the first one, and second one is CVET. And I hope that helps. Folks, Wall Street veteran Adam Sarhan and I just revealed our hottest Alpha Line stocks to thousands of traders, which could potentially triple their money in just a few days. Now, if you weren't in attendance earlier today, you really, really missed out big. But I come with good news. You still have a few more hours to get in on our number one Alpha Trade stock. We've already witnessed gains of 179.17% from Wayfair, 1,246% from Domino's. Can you imagine making 1,200% on Domino's? It's a pizza company, from crying out loud. 2,422% from Fastly. Now, I do not want you to miss out, so be sure to click the link below before it expires at midnight tonight. I'm going to say it again. It expires at midnight. Click the link below so you won't miss out. I still can't imagine how someone makes 1,200% on Domino's. Don't miss out. Follow the link below. Get in on it now. Take care.